Okay, good morning, everybody, and welcome to the Gulf Intelligence Daily Energy Markets Forum, Thursday, July 15th, the middle of the month. Oil prices are opening in Asia a little bit softer this morning. Let's jump across to Sydney, Australia, with Peter McGuire, CEO of XM Australia. Peter, the reading of the tea leaves in China's economic performance in the first half of the year seems to have sort of generally been more positive than initially the sort of sentiments were indicating, particularly on oil, with record throughputs in refineries last month after the refinery season, the maintenance season had ended. Asian shares are advancing this morning. Your thoughts on the Chinese numbers?
Well, Sean, they've just been released and we're up about 7.9% year on year, though we've got to take into consideration we've got that the manufacturing hub in the southern part certainly being crimped a little bit from lockdowns, and that's I don't think it's going to wear too well for this quarter. It could actually be a little bit of a handbrake. The PMIs declined sharply in June, so we take that on board. But overall sentiment, I think, is positive. What we saw last week, of course, was the central bank freeing up or loosening, capital requirements for their commercial banks. So we understand it's a debt-driven economy, and that gets everyone borrowing again. But that could be an issue again moving forward over the next 3 to 6 months, kicking the can down the road. So there's that side of it. They're bid up today, Sean. They're about 1.1% up. Hong Kong's up as well. So Aussie was down, and it's always a proxy for the Chinese market. Aussie dollar's down, Aussie stock market's down, but China's up. So overall, I don't think it overwhelmed, and it didn't really underwhelm. So we're just tracking normally along that growth trajectory.
Peter, we still have in the Asian story, and particularly in Japan, where the Olympics do seem to be now very much going ahead, the Nikkei falling sort of against trend from the region because there's still concerns about rising domestic COVID-19 infections in Japan. How big of a sort of weight is that on the sort of overarching Asian recovery in the second half, do you think, that the sort of COVID lingers along while vaccines are low in terms of their rollout?
Well, Sean, I spoke to a dear friend. He's an older gentleman. He's about 83, lives in Tokyo, a Japanese gentleman, and been there all his life. And he was saying it's now the fourth lockdown. They're going through this whole phase of uncertainty. Naturally, it's hit them all fairly hard from an economic standpoint. You can imagine in the center of Tokyo, a marvelous city, would have been expecting hundreds of thousands of visitors over that summer period, now zero. And then the next part is, so there's, I think, a handbrake to certainly their domestic economy. The Nikkei's had a very, very solid move to the upside, being very strongly bid up. And maybe it's getting a point of exhaustion, Sean. The other side, of course, is we've got tapers starting to be cut. Talk of it, with the likes of New Zealand possibly first cab off the rank. So the introduction of the carry trade again being a hot topic for traders in the currency game. And then where does Japan play? Does it keep on keeping on with stimulus and the uncertainty being how long does this lockdown last for? And then what ramifications does that have south of Japan, leading into the likes of Philippines? We're in lockdown here in Australia, in Sydney, and we've got Melbourne, Victoria, the state of Victoria, they go into lockdown tonight, as well as Queensland's in lockdown in Western Australia. So it's a major impact sweeping all of Asia, and it's a continuation that doesn't seem to be showing a lot of sunlight at the moment, Sean.
Well, maybe, Peter, you could give us some of your thoughts on that. I mean, the China narrative, as we started out the talk this morning, remains a little bit cloudy. The idea that these economies in Europe, as Rustin was talking about, and the US, have essentially learned to coexist with COVID reinfections, and obviously Europe very highly vaccinated, slowly but surely. Asia less so. What are your thoughts of that sort of China story in the second half of the year? Does it hit the big numbers? 7.9 on the average for the year?
Well, Sean, a couple of things. That first off, I don't think the 7.9 really, it didn't shoot the lights out to say, and I mentioned that earlier, you know, if it would have overwhelmed and been on 8.4, everyone would be sitting here now and be going, clapping their hands going, wow, they're really on fire. So it was a little bit underwhelming. And then you've got retail sales. I've just made some notes here, you know, industrial production, fixed assets, investments all experienced to have slowed in June. So that part of it, it's not a booming second quarter that we saw. It was actually a tailwind that started to lose traction. And where it goes moving forward, you've got, as I said, that southern region of China where you've got such a huge industrial hub, all of those supply chains, again, going through a lockdown phase. What happens there as far as export-driven economies? If we go back to a lockdown, are people going to renew are they going to lose, I think, the confidence, Sean? That seems to be very much on the footprint of Australians.
There's also reports out of the southern Chinese area, manufacturing area, where companies were refusing new orders because of the margins were being squeezed so tight by the rising commodity costs. So they were just essentially saying, well, we're not taking any more orders regardless because we're not making any money.
Well, that's right. And then you've got, and I was just about to say, the inflationary impact, which is really beyond, I think that's the gorilla in the room. And that's really creating so much angst to consumers in the West. How much more expensive are things? And you've got all of those input costs being, we know, higher base metal prices, higher energy prices, higher foods, and a lot of people aren't getting higher wages. So it really comes down to how much is left in the wallet and the purse each week to buy those extra goods. And that's being demonstrated as far as that's where I see the next quarter or 2 quarters could be a little bit of a handbrake for China. And really, if we're all in a lockdown, Sean, it's going to be a very, very tough leading to Christmas.
Peter, the essential element of the point in the question is the price and its impact on consumers, and ultimately that OPEC Plus needs to be cognizant of not squeezing or killing demand recovery, and so keep prices under 80. Your thoughts on what the ramifications of that is for Asia? Does Asia care if prices go above 80? Are they happy in the 70s? Nobody seems to be screaming too loud.
Well, I think they are screaming, Sean. They're just not being heard. I think there's certainly screaming across Indonesia what we're here, certainly in India, very much in the Philippines. I'm sure Thailand wouldn't be over the moon, neither would Vietnam. Possibly China's okay with it. But the issue quite simply, and maybe that's even debatable, but at 92.3 for that US dollar index, and if Powell starts to say rumblings as far as, taper cuts and pulling, which he hasn't said yet, but certainly an inflation number, that US dollar is going to actually increase further if that is the talk. So you could see a 93 handle, 93 and a half. So that's really going to, again, cost more.
93 plus $80, that'll be a big squeeze.
Yeah, no, well, 93 and a half as far as that US dollar index, exactly. And if crude prices edge up higher, then, you're being hit both sides. So there's the side that I think, from a consumption point, we're addicted to crude oil, as we know, and those forecasts moving out, as Carol highlighted and yourself, what they are over the next, 3 to 6 months. The reality of the matter is you get crimped and you've only got so much in your wallet and your purse. And if it's going more to fuel and inflation, then you've got less to spend on other goods, Sean. And that really is not a good thing for any domestic economy, as we know.
Thanks, Peter. Thanks, Rustin. Have a great few days, and we'll catch up with everybody shortly. Thank you, guys.
Happy Eid to everyone. Thank you.
Bye-bye.